Hey, Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when he said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Oh, we got to bring him out, huh?
Yeah, we do. Yeah, we do. Bring him out. Bring him out. Hello, everybody. Welcome back. It is Saturday. It is 8 p.m. Eastern. And we hope you're all in a bit of a feisty mood tonight, because tonight could get bad. I would recommend tucking the kids in bed. This could be an ugly show, everybody. This could be an ugly one. Speaking of ugly ones, some ugly things happened this week. But, Fiscal, how was your week?
Hey, it wasn't too bad, honestly. I mean, stocks went down, and you know how much I love falling knives, so maybe some more opportunities to find some good deals out there.
I've been hearing elsewhere, though, Fiscal, that when stocks go down, that means they're bad companies.
Yes, usually.
It's true.
Almost always. Every time.
But Fiscal, it's Saturday, it's 8 p.m. Eastern, and all the people watching right now, it means, they have something right in their life. But what could other people be doing right now that clearly aren't wearing shades right now? They aren't coming to the Cash Flow King's backyard scrap, you could even say. What could they be doing right now?
Let's see. They could be drinking. They could be using some Altria Group products. Maybe some vapes, maybe some cigs. They could be doing a little bit of the marijuana.
Very bad stuff. Very bad stuff. But before we get into today's episode, we have a few things we'd like to plug. First off, follow our Twitch at Cashflow Kings, follow our Twitter at Cashflow Kings YT. Also, join both of our Discords because if you guys understand the context of a lot of these episodes, like throughout the week and like the build up, it makes it like 10 times more better. So just do all of that. Also, we went on the Brewing Great Returns podcast yesterday. We'll submit a link to it, I'm sure, in the description box, but had a dandy time over there. We didn't go as rated R as we thought we probably could, but we'll save that for tonight. We made fun of some people's ages, but that's it. All right.
We kept it mostly family friendly.
Mostly, but you guys know here on the Cashflow Kings, we went a little early tonight. We had some things to say. So if we have anything bad to say, we will tonight. All right. I think it's time that we first introduce our guests. Tonight's debate, we will be going over. It's more of an open discussion, to be honest, but we like to play it up a little bit. We're going to be going over a bunch of subjects tonight. I'd consider it more of a growth versus value investing debate, you could almost say. I'm on the growth side, you're on the value side. I'm Catholic, you're convict. I'm capitalist, you're communist. Who knows? Who knows?
Whoa. Now, I completely disagree.
No commies here. We're joking. But to start off, our first guest, the polarizing, the REIT analyst, the Seeking Alpha quant analyst, new affiliatee for Seeking Alpha. Free advertising. Dividend dude. Welcome in, Double D's. Double D's is he's shocked. He's so excited that he's here. He's not even saying anything. That shows the magnitudes of the Cashflow Kings live.
All right. I'm sorry.
Welcome in, Double D's. Who doesn't love when a pair of Double D's come into the party? As Fiscal always says.
Always exciting for me.
As long as they're of age. All right.
Pleasure to be your pleasure.
Yes,
I was
absolutely.
doing something. Yeah.
And next, you guys may know him. This is like a mythical creature we're getting out. This we got Matt the Dividend Prophet on one time. This may top it. I think the only way to give a proper introduction is, well, you'll see.
Dissector, you an idiot. Dissector, you an idiot. Dissector, you an idiot.
So nice we had to play it twice. We have Dissector, or Dissector. However you want to pronounce his name, that's up to you, the viewer. But Dissector, welcome in.
Yo, how's it going, guys?
And we have a betting odds.
Is it Dissector or Dissector?
Dissector, whatever. Dissector. Like this?
There we
Dissector,
go.
you an idiot.
Yeah, we got. This is
Dissector,
great.
you an idiot.
Oh my
It's
god,
amazing.
We're
Is this gonna be? We need to have like an over under tonight for like how many Dissector you an idiot. I don't know if I'll be able to contain myself with this new soundboard. All right, welcome in everybody. Looking at the chat, we got Jonathan Judas in here. We got Stabulo. We got Haas, uncertified financial arouser, who has been on the Cashflow Kings before. Will he come on again? There's a lot of stuff that goes down in the Discord that stays in the Discord, we can say. But welcome in everybody. All right. Is there any subject that I'll leave it to you guys? I already have a bunch of them preloaded up. We have some viewer recommended subjects. Is there any subject that Dividend Dude or Dissector would like to start off with first?
I'm good. We can get going with what you have.
Okay. I think first off, I know a lot of people know Dividend Dude, his strategy, the Joseph Carlson dividend growth strategy, the right side of investing, some would say. But Dissector, what's your strategy? Because I have a portfolio review of yours, and it's definitely interesting to say the least.
Yeah, man. So I'm just gonna start with the beginning. So I got into investing right around late 2022, right before the election, and I was talking to my friend's dad, and he was telling me, dude, you got to buy Amazon stock before the election. It's about to skyrocket. So he was just telling me, go all in on Amazon, do this. And I'm like, okay, man. Okay. And it was in the 90s. So I picked a bunch up. It was really good, as we all know. It went up like crazy. And that's how I got into it. And then I started going to YouTube and Seeking Alpha and all these resources to learn more. And, I'm still learning. So I'm still learning my philosophy. But, overall, I'm more indexed now. I believe in index funds. I think markets are overall efficient. But I also do like momentum investing. I think that's a good strategy. I think there's been studies, and I'm still trying to learn more about it. But like Dividend Dude, he likes to go with these high quality companies, growing dividends like crazy, these, mega billion-dollar businesses. I like going for growth. So I like companies that are smaller, they have more room to grow. I have a lot of large caps. Amazon's my largest holding. But I think you can get some more risky plays in there. I mean, you're 20, you're 8, I think you're 18 Dividend Dude. You can take a little bit of risk. And that's just who I am. I'm fun. I'm a gambler. I like to have fun. I like to game. I like to do cool shit. So I don't like to just sit here and buy Visa. I like to get the high ties, the giga clouds, these stocks that have real room for growth. So that's how I view investing.
This is savage.
Wow.
I mean, like half of your picks are from the Seeking Alpha subscription newsletter and the email. What's the allocation between your ETFs and your Seeking Alpha portfolio?
ETFs probably that's mostly VU and SCHG, which I saw you just got into. Great ETF, by the way. That's probably around 70%. So my risky position, I have a good amount, but still lower. I still believe in. I still want to learn more and have more conviction before I go all in on individual stock investing.
Yeah,
that is you can get burnt real quick doing that.
Definitely, it's a very interesting portfolio for anybody wondering, and it may or may not be up tomorrow because it's a sponsor approval. I don't know if they like all the Khmer clips of saying you an idiot. Kind of selling out here.
You are an idiot.
Yeah, who's playing that? Is that Dissector?
That's Dissector.
Oh, Dissector! You came prepared.
That is the greatest clip ever, man. All my friends know about it. I think all the YouTube channels know about it. I mean, it's a classic.
Dissector, you an idiot.
Yeah, we might even have like a contest of like who can do the best like impersonation. We can have like 3 judges for the end of the year show fiscal. We could possibly do that.
Yeah,
I don't think it's gonna be you, Ryan. I'm just gonna say that.
Oh, come on. I haven't. I've showed you 50% of what I can.
I have a lot in common with Dissector. He's an idiot. I'm not very smart at all. We're in good company right now.
And I'm Ryan Dingling. Dividend Dude, you're the only one that hasn't been on the Khmer. I don't even know what to explain it as.
I've talked in his chat before. He just hasn't said
Khmerverse.
I've literally done the same things other people have done. I don't know. Maybe he's a little intimidated. I don't know.
Maybe if you mention Warren Buffett, he'll be like, "You're not very smart at all."
He knows you're from New York, so you're gonna get him next time they have a Rec Shares conference. We can get into that if anybody wants to.
Go into a Rec Shares.
I hear New York needs street
Rec Shares.
Yeah, well, to start off, I think a good topic of debate, and I'm going to start off with the hot hitting ones, fiscal. The hot hitting ones. And this one was piping off in the Discord. We had to cool down a little bit. We had to go on the Brewing Great Returns podcast. We had to cool off, let ourselves seethe and sit for a little here. But Walgreens Boots Alliance. Dividend Dude, you do not like this. This is not a double compounder with cheese, you could say. It's not a company that you acquaint yourself. You're not familiar with that game. You don't respect it.
I mean, overall, I just think Walgreens, if you just take a look at the fundamentals of the company, they're not really going in the right direction. They seem to be a lower quality pharmacy. I know the pharmacies are like a Rite Aid, which went bankrupt, by the way. Walgreens Boots Alliance, CVS, and then you have even Amazon getting in there, and Walgreens is just the only one out of those that have declining fundamentals. Even if you look at CVS, their fundamentals are going in the correct direction. You don't want your free cash flow going down. You don't want your earnings per share going down. You don't want all these things happening to the company. It's reflected because the company's negative 65% in a 3-year time frame or something like that. So
and especially if there's a legit reason for it too. There's definitely some instances where the cash flows they go down for a year. Look at S&P Global, or maybe even Target too.
No, but these free cash flows have been going down for 4 years, maybe 3.
So it's not that simple as you're making it out to be. First of all, so when I got in at the beginning of 2022, they had in 2020 gone up from where they were in 2019. 2019 was a pretty big decline from 2018, right? But 2020 had gone up from 2019. 2021 had gone up from 2020. And it's early 2022. It says it looks like they're maybe rebounding a little bit. There was a lot of positive sentiment around Rosalind Brewer.
Boo! Get her out of here! Get her out of here!
Starbucks. in generally the consensus at the time was this is a dividend aristocrat with a really good coverage ratio. But then bad things started to happen, and bad things can start to happen to really any like. Is it possible some of them might have been able to be foreseen? Maybe, but certainly not all of them. Retail theft certainly got worse rather than better. Um, they had a very large impairment due to an opioid lawsuit. Now, by the way, other pharmacies had to pay on this as well, including Walmart. It's just their market cap is so large that it was like a mosquito bite for Walmart versus Walgreens, a smaller cap. It was like billions and billions of dollars, and a company like Walgreens can't absorb that hit quite as well. I definitely wasn't expecting that to be that bad. I kind of felt like a 3M shareholder right around that time.
Right.
And so just some things happened that I personally didn't anticipate when I was originally valuing the company. And it ended up being, in my opinion, maybe worth a bit less than what I paid for it. And so it's going to be a drag on my returns. And that's just the way it is sometimes.
Mm-hmm. All right, but one question I have is like, at that time, why did you go with Walgreens over like CVS?
So
Looking at both of them very similarly.
at the time, the valuation for Walgreens seemed more attractive, and I don't think I considered Aetna as like CVS. I was just viewing as it's basically just like Walgreens except more expensive. I wasn't really considering the Aetna side of it, and that's the reason.
Okay. I mean, it's fair. So you basically thought a company was going to like recover. You thought it was cheaper than it was. And then a bunch of, let's say, black swan events occurred.
Yeah. Well, I wouldn't, none of them on their own, I would consider like a black swan. Like, it's just like, the fact is, like, any one of those things in a given year would probably cause a decline in share price. And it's like 3 or 4 things happened in one year. And it kind of just sucked all the wind out of the sails, I think, especially, right at the end of that year after they got punched down and kicked down once or twice. You could say even jumped and attacked. Then, Roz Brewer, like, just kind of like slinks away in the middle of the night. Like
That's
some
a-
kind
that's
of
a- that's a
like some
not
kind
a
of bad
real one.
Tinder
I feel like,
hookup.
but I feel like Walgreens
yeah.
is just another company. Like, it's just like another, like, there's nothing special about it. Like, it's Walgreens. Like, I don't know why you would.
Yeah.
someone
And
would go with.
I'm not saying there really is anything particularly special about it. I mean,
Oh, okay.
the boots
All right.
part of the business does pretty well, but it's unfortunately the smaller part of the business. So, yeah, it hasn't been great. I do have an exit strategy with it, so I'm just gonna be patient and wait for that.
I mean,
wait for that to
anecdotally, every time I go to Walgreens, it's a ghost town. There's like a couple people there, maybe 1 or 2 people there shopping, but there's not many people there.
So
I'll be
I mean,
honest.
anecdotally, where I live, it varies by location. Some of the locations, it seems like there's always cars in the parking lot, and others, it's like they're like the ones that are kind of more like maybe look a little bit like
Yeah, a lot of
older
the
and
ones
more
in
run
shitty
down.
neighborhoods, like honestly, those are the ones that like are losing a lot of money due to like theft. And
Yeah.
Walgreens, if you like look at their core business, like stores like 5-10 years ago or whatever, there's a lot of Walgreens in like bad
But
neighborhoods.
I will say, there's one near me that has one of those Village MD things in it, and it looks really nice. And that's one of the ones where there seems like there's always cars in the parking lot and stuff. So maybe with this new CEO they have that's more focused on healthcare, they can possibly drive some efficiency, some synergies with that, and grow the healthcare part of the company, and maybe stabilize the retail part. I think they really just need a couple of quarters with like somewhat decent EPS that at least meets expectations without any more really awful stuff happening. And we'll see some kind of a recovery in which I can possibly exit at a price that's not too unsavory for my taste buds.
What are we thinking, like 25, 28?
Yeah, actually, like, I was looking at some some numbers, like where the guidance and stuff is right now for what they expect to earn, and I landed like right around 26. And in the meanwhile, I plan to sell covered calls to sort of kind of collect premium while I wait. I'll sell them slightly out of the money. So if the price starts to recover, I won't necessarily lose the shares at like a super, super cheap price. Like try to avoid selling the bottom when I can.
Yeah,
Alright.
I think that like the fall off of that kind of retail has been wild too. Like I
Yeah.
remember like 5 years ago, like I wouldn't have thought like it's kind of like the realty, not reality income. You know, a lot of those their occupancy rates like 95, 96% now. And it's like a lot of that kind of retail, I think, is just like dying. And, you know, Long Beachy right there.
And it's especially with the competition, especially in the healthcare space. You get Amazon going in on that. You have Mark Cuban, his new company.
Yeah.
I mean, I just think there's better opportunities out there. There's 6,000 stocks out there, you know. Their EPS is going down. I just don't see the future of it.
A wise man once said, if the P isn't 3, then it ain't for me.
Yep.
All right.
If P is
MPW.
5, that's too much.
MPW Dissector, my favorite Scooby-Doo fan. Well, we'll start with Dissector because everybody knows me and Dividend Dude's thoughts on MPW. But Dissector, do you have any thoughts on MPW, Medical Properties Trust?
I mean, I don't really get it, but it looks interesting. I mean, Physical has a good
Alright.
thesis for it. I mean, it's trading well under book value, and for REITs that that could matter. I mean, they
Yeah.
definitely made a comeback. I just don't know enough about it, and I think there's probably better opportunities out there. I don't like to get stocks that go down. I think that'd be a trap more of the time.
Yeah. Well,
just
if you want to
a
get
value trap.
if you want to get granular about the really nitty gritty details about MPW, the best person to talk to is Jordan because he's 100% allocated. So
100%, yeah.
Yeah, 100%. So I'm versus me, like that's 10 times my allocation, and I'm supposedly the cult leader. So, but yeah, it is primarily like the primary driver of the value is the balance sheet in, I think, his opinion and my opinion. And it seems as though the management tends to get attractive deals on things. And when they do support tenants with like loans and things, which this is the thing that the short sellers are really having a problem with, calling it fraud and stuff. It seems as though they secure the debt against profitable divisions of their tenants' businesses. So if there's like any type of liquidation or anything, they get their money back. And I think, and their master leases are really ironclad. And the last tenant they had that had a bankruptcy, because this is the big thing right now, is one of their tenants might go bankrupt. They are getting paid by that tenant that previously went bankrupt. That tenant is still making payments to them. So they tend to get their money one way or the other. And I think that the negative story about it is really overblown, and a lot of the like social media negative sentiment is driven by this guy named Fraser Paring. He bothers to comment on my videos telling me to be afraid. And he like threatens people on the Yahoo board. It's really him. Yeah. Like he like threatened to dox somebody and stuff. Like, also a side note, he also threatened to destroy anybody that implies he's gay. That is like the straightest thing I've ever heard of anyone doing.
Oh my God.
Yeah, it's in their Wikipedia page.
Yep, Fraser Paring, you heard it here first. Don't come at Fiscal. I don't like MPW either, but you sound like a fruit. Come on, Cash Flow Kings, and you're a bitch. So there you go.
Yeah.
Cash Flow, there you go, everybody.
Yeah, and I just want to say I respect it, Fiscal. I love your conviction in it. That's awesome.
Yep, we love
And
conviction.
like that's how you get, if you see good opportunity, don't be scared of it. Just go for it.
Yep.
We have to be risk taker.
Anyway, the risk taker. I hate to move away from the topic subject here, but how did you get the whole Khmer situation happen?
Oh my God, I think I was interested in the yield max. I just saw it and I'm like, dude, this looks cool, like 50% yield. That's awesome. Let me check it out.
Free
and
money.
Luckily, I never really allocated a lot to it. I was doing covered calls myself, and I thought the appeal was, hey, I don't have 100 shares of Amazon, and even if I did, I wouldn't want to, risk capping my upside on it. So I still get some covered call exposure with these ETFs, right? So I went to go look more into it. I actually learned about it. I learned about how covered calls work. I went to Khmer's Discord, and I did whole simulations. I talked with ChatGPT. I'm like, in what markets will this do best? When will it
That's
suffer?
more than
All
Khmer
that.
will do.
Yeah, so I
definitely
did
reason.
my due diligence because I'm like, dude, if this is really a 50% yield, that's better than Buffett.
It's free
I want
money.
in on it. Yeah, it's
Well,
free money. So I just
but
did all my due diligence. Yeah.
that right there's the problem, right? Because if
Yep.
it really was 50% and there really was no catch, yeah, like you would see whales like Buffett either using the strategy or getting
Mhm.
into they don't. So
That's
clearly,
the first question you have to ask. That's what I asked. I'm like, who does this? And that's the big psychological appeal is they just trap people. They don't look into it or
Well,
anything.
They have a different
actually,
kind of whale on their server.
I
Yeah.
don't see Warren Buffett investing in Walgreens or MPW. Unfortunately. He invests in
It's
Apple,
Paramount. It's
American
Paramount.
Express, Visa. I'm
yeah,
just saying.
Berkshire does have Paramount, but
That is
and
true. That
HPQ.
is.
I actually share a lot of positions with Berkshire. They're just not the most popular ones. But
I mean, or
but
the
yeah,
allocation will be like
but
I mean,
MPW, like the market cap's too small. Like if Buffett bought an amount of MPW that could represent a worthwhile investment, they would basically buy out the whole company. And
no
so
super investor has MPW or like Walgreens though. I'd
no, there's
probably
actually, if you pull up a lot of 13Fs,
let's see here.
a lot of them do actually. Yeah.
MPW.
Miller
Cisco's
Value
actually the third
Investors,
largest shareholder, and behind Stabilo.
but it's mostly fund managers in the hundreds of millions that bother with MPW, not the multi-billion ones.
Yeah,
Because for the multi-billion guys,
it's not big enough. Yeah,
it's not big enough. Yeah, but like Miller Value Investors, which is one that I've been studying recently because they seem to have a really interesting approach. They have a few $1 million in MPW. They've got some other stocks that like I've previously looked at, but like was squeamish on, and they've done pretty well on those. So yeah, it's pretty interesting. And I think you can learn a lot from those fund managers that manage in the 100, 200, $300 million range versus the ones that have like a gazillion dollars,
oh my
because
god.
they have to approach
Wait,
their opportunities a little differently.
the guy you're talking about, you know what else he owns?
Hmm.
Crocs.
Crocs. Oh yeah, Crocs. I saw
That's
that.
actually crazy.
Yeah. No, actually, that's one of the things I that caught my eye, because he had Jackson Financial, Medifast, MPW, and Crocs, and these are all stocks that I've looked at in the last year, and I'm like, this is an interesting fund.
Yeah, but I mean, I prefer like guys like obviously like Buffett, Contasaria, Terry Smith, kind of more guys or Chuck Aker, guys more quality oriented. I don't really like buying into businesses that I don't see as like the highest quality. Like over long time frames, I just don't think they're going to do well. It's not worth the stress in my opinion. I really don't want to take like those type of bets. I rather put my money in companies like Visa, companies like Costco, companies like Apple, Microsoft.
If I didn't want stress,
What about
I'd
Joseph
buy
Carlson?
VT.
I'm talking super investors, and Joseph Carlson isn't mentioned. I view that as disrespectful.
I mean, he's not a super investor. He's an investor. He's a good investor, in my
He's a
opinion.
super investor in our hearts. By the way, 49 people in here. We just hit 50 total on everything. Smash the like button.
Is that a record?
60, I will call out anybody you guys put in the comment section. It's up there. It's up there. Why is MPW down to $4 again?
So I have some ideas on this. So there was recently some possibly bullish, decent news, whatever, that made it shoot up to almost $5. But in the intervening time, like nothing really else, no elaboration on it really materialized. There was also a hearing they had in Congress, basically to berate Steward Healthcare, which is MPW's biggest tenant, the one that everybody's worried about going bankrupt. And none of the Steward people showed up to the hearing, and so that may have been a bad look. Also, there was some I think there was some bad data somewhere or another that came out. Some broader macroeconomic data that kind of made the whole market go down. And because it's such a volatile stock, if the whole market goes down and there's not some like good news to keep it, buffed up, it's going to probably drop more than the overall market because of the massive volatility. So, and also there is growing uncertainty. Everybody is worried about, they're very, very past the point where they would usually have declared their dividend, and they've been silent on it, and everybody's worried, are they going to, won't they? And there's a debate amongst investors as to should they, shouldn't they, and all of this. So the uncertainty, I think, kind of killed the momentum a little bit to the upside there. So
I think my thing with value versus growth investing, to get to the main point of the video here, would I rather at 18 years old pay a little more of a premium for a really good asset that every night I don't have to worry of, whether their, segments are doomed for their, one of their tenants are going bankrupt or whatever. I'm willing to pay more of a premium for me to sleep well at night and instead of, I don't want to call value investing a gamble, but you are betting on something that it will recover if it's to an extent of some of these companies. Like you're betting that, Stewart is going to, not go bankrupt or.
Actually, I'm not. If they go bankrupt, it's not a problem.
Okay. You're betting with, 3M that these lawsuits won't be an issue. I don't
like 3M.
Hey, I know that wasn't you. That wasn't one of you.
You're betting that Walgreens is going to somehow turn around the business, even though retail seems to be in decline and theft is still really big. But all right, Ron, you can continue.
So I'll let Fiscal respond after. But so essentially, I'd rather have my money during that time gradually compounding, buying more, instead of having to continuously kind of worry every morning. I just don't like that if one of my holdings is, down 15 or 20% for some crazy reason that goes against my thesis much faster. I'd rather pay a bit of a more premium, hold and buy good companies for a very long time and let them grow. That's just me personally.
100%. I agree with that. Overall.
100%.
Would you like to respond to the Walgreens claim?
Well, I think with Walgreens, it's just a matter of the fact it will have its earnings go back to closer to like a normal level. I'm not saying that it's going to, suddenly start growing earnings, 20% a year for the next 10 years or anything like that. But the earnings were absolutely crushed over the last year or so by multiple, I think you could call them multiple one-off events if you want to. And I think once they have a few quarters of a more normalized earnings level where, they're getting, 330, 350, whatever a year in EPS, I don't think they're going to stay at like $19 if they're like, I don't think they're going to trade at 5 or 6 times earnings. I just don't think that's going to happen. And so I think they could get back up to, something like 26, 27 bucks. I can, bid them adieu, give them my old salute and thank them for their service and, realize my small loss. And maybe it won't be so bad once I factor in options premium and, move on with my life.
Now, opportunity cost is a very real thing, Fiscal. Would you ever consider potentially, just biting the bullet, taking the loss? I've done so with 3M and a few other companies and just, kind of letting that money go into some.
So I used to have 300 shares of Walgreens. It's now 200 because I've been selling covered calls for a while. I let 100 of them get called away on a covered call. So it's not as though I'm like trying to cling to the shares for dear life or anything. It's just, I think the covered calls can somewhat mitigate the losses and we're likely to see at least a certain degree of share price recovery. I don't think any time in the near future, it's going to go back to what I paid for it. I just don't think that's realistic right now. I don't like within the next 3 years. I just don't think that's happening. But do I think it gets back up to something like a more reasonable level if they have like reasonably moderately okay results? Yeah, I think that people will maybe be a little bit less skittish with it and maybe a little bit of money comes back in, especially if there's like a rate cut or something too. That would probably bode well for them. Maybe their debt doesn't look as scary. Maybe the yield looks a little more attractive. That's just my thoughts on it.
There you go.
Yeah, I'd like to respond to that.
Oh, go.
Because I think my fiscal philosophy is that short term markets are a voting machine. Long term, they're a weighing machine.
Yeah, Paul.
So when you're going with valuation,
someone who shorted a video said that, and he also comments on that. But continue.
Yeah. I think these value plays, you're just going with a company that has gone down a lot, and for very good reasons. That industry is dying.
Yeah.
Unless they have some sort of momentum, they're not going to recover for a while. Like, they need some good news. They need something. That's typically what happens with stocks that fall down. So I just think, like Ryan said, opportunity cost. There's so many stocks out there that have great valuations that are going up. They're going in the right direction. They're in growing industries like high tie. But
Oh.
yeah, man,
Oh my God.
I
mean,
think the falling knife strategy, I'm just not a fan of that.
the falling
And
knife
plus-
strategy.
Yeah.
And plus I
Falling
think like
knives-
the
Falling knives method. Thank you very much.
I think the fact of like letting your money
Oh my
potentially
God.
compound somewhere else and building up like a really solid position. I just personally, less risk involved with that, and I think it's more predictable than maybe some of these value plays.
Yeah,
I understand some value plays are legit, and I have some as well.
So
yeah, well,
I honestly think
All right.
exiting Walgreens at this time would be something I'm doing emotionally because I'm upset at how much it went down. More so than I think it's appropriately priced at the moment. I think it was probably overpriced when I got in, and at the present moment, there's a good chance it's underpriced. It, as they say, it can swing both ways. And just because I've taken a beating on it doesn't mean now that it's appropriately valued and I should just sell at the absolute. I mean, and I don't know that it's the absolute bottom, but I think, I think that it's definitely fallen below what it's actually worth.
So fiscal, let me ask, do you have a time frame for when you'll sell? Do you have like rules for that? Or just whenever your thesis changes? Like, if it stays flat for 6 months, are you going to reconsider it a year? What's your time frame?
That's the main reason why I'm using covered calls, because I think one way or another, if I keep selling the covered calls slightly out of the money, I'm probably just eventually going to exit naturally because
I like that strategy.
the stock will just kind of naturally bounce up and down. It won't go 45 degrees and up and to the right when it recovers, and it could pop a little bit out of into the money on my calls, and I could end up getting the shares called away. But in the meanwhile, if it's languishing, I can at least collect premium. I mean, selling covered calls is it's something you can utilize if you think the stock is either going to be stuck in a channel for a while or possibly even go down further, just to help mitigate things a little bit. And I like using that strategy for stocks like Walgreens.
mhm.
And
You don't
plus the
PP comes in.
volatility, the premiums are really nice.
Yeah.
Yeah, I like
PP
that
comes in.
strategy. Yeah.
PP comes in hot. PP. If it's not down 50%, I'm not interested in it.
Exactly.
I wonder if he's serious. But once again, a wise man once said, if the P isn't 3, then it ain't for me.
I rather my stocks keep hitting all-time highs, keep growing their free cash flow, keep growing their revenue, margins, earnings per share. Those are the companies I like investing in. They pump
You're
cash
not
right
going to
back
lose a
to
lot of
me,
money that way.
not destruct
yeah.
value. I mean,
honestly, things that are constantly hitting all-time highs, that seems like recency bias and performance chasing.
actually, it can be followed. It can be followed by free cash flow hitting all-time highs, revenue hitting all-time highs, earnings per share. A perfect example of it is Visa, which, in my opinion, keeps hitting all-time highs like every 5 years, and that's backed up by fundamentals. So it's not really chasing something if they're buying back shares, doing all the things that make an intrinsic value of a company go in the right direction.
Yep.
We love Visa here.
Hey, Visa's good. I have some Visa.
Technically. And the SHD killer?
No.
Oh yeah, I voted it for you.
Yeah, exactly.
Everybody had like
exactly.
a thank you in the comment section.
See, I'm a believer in democracy. I'm like Emperor Palpatine. I love democracy. And on my channel, I let my viewers pick stocks for me sometimes, and I buy them. So, yeah, I do have a little bit of Visa. Unfortunately, you guys picked 3M for me, you bunch of dirty scoundrels.
Well, I think the votes were pretty bad for it. It was like between like Verizon. Somebody fact check me there if it's a.
By the way, but by the way, speaking of Verizon, that's one that I've been criticized for up and down. I'm doing quite well on my Verizon.
What are you?
You have Verizon?
Yeah, I have Verizon. I got in at $37.
What? All right, see, like,
I've also collected a lot of dividends on it and gotten
money.
a lot of options premium.
Sure, the price may go up, but like I mean, the fundamentals of Verizon, they're not going anywhere anytime soon. I mean, that company has a load of debt. Their free cash flow is pretty stagnant. I mean, that company is not a good company at all, in my opinion. In my opinion, that's kind of the definition of chasing yield.
When interest rates go down, or they're anticipated,
they might not, and for a while. I mean, yeah.
But that's the expectation that they will, and yield will become more attractive, and money will flow back in. And so it's sort of a swing trade, I guess you could say. But I've been collecting plenty of dividends and premiums and share price appreciation on that. And hey, it's working out well. It was a little bit. Is it a little bit of a cigar butt? Sure, but it just goes to show you can make money on a cigar butt. It doesn't have to be always the high flyers.
The choices were 3M, Dow Inc., and UNP. I voted
over the last 10 years. If you held Verizon since 10 years ago, your price return would have been negative 13%. If you factor in dividends, I don't know how much that.
But I didn't buy it 10 years ago because, first of all, I wasn't really looking at the stock market 10 years ago. But based on what I do now, like I wouldn't have thought the valuation was appropriate.
What's the point of holding a company that's not like kind of growing in intrinsic value? Like they're not getting becoming a stronger company. They're not giving more cash back to, like, what's the point of holding that?
It's about mispricing. It's not necessarily about, oh, this company is gonna 10x their earnings in the next 30 years or anything like that. It's the earnings and the cash flow that they currently produce, even with minimal growth, is worth something, and the market right now is pricing it for less than that value. Therefore, I want it. That's all. It's pretty simple. It's like have you ever heard the concept of I know what you're talking about. I want to buy something that's worth $1 for 80 cents. Or something. Yeah. That's really all I'm doing with something like Verizon. I thought it was undervalued at the time at 37 and would eventually get back closer to a fair value. Now, do I think it's going to 10x or anything like that? No, absolutely not. I don't think it's going to be a multi-bagger, and I have an idea of my exit price on it.
I guess you kind of just look for those companies with one puff left, if they, as they
it's not that. I mean, I think Verizon's going to be around a long time. I just think.
So do I. But
yeah, it's not a one puff situation. It's just not really a growing. It's not really a growing enterprise anymore. It's a very mature late stage business.
Yeah, it's pretty much asking to like underperform the market investing in Verizon. I mean, you can't expect to get. It
depends on what
maybe
time
7 or 8%.
Like, you can cherry pick any time frame to say this overperforms or this underperforms, right? And I chose. That's why I choose it to try to get in when they're.
I mean, their intrinsic value is not growing at a faster rate than the market. I mean, yes, the price can fluctuate to where it's outperforming in certain time frames, but their fundamentals are not growing at a pace that would beat the average company. They're worse than the average company in the market, I'd argue. But we could agree to disagree. If I think you're just looking for a kind of swing trade. That's what it sounds like to me.
I mean, something that's temporarily mispriced. Can in a sense be a swing trade, yeah. Something that's not like, there's some companies I do think are better for like years and years and years, like maybe Comcast.
I agree with that. I think Comcast is not bad.
Yeah, Comcast I think is pretty good for the long run. They have a lot of there are mature parts of their business, but they have some room to run. I think with theme parks and stuff. They have a lot of similarities with Disney actually. But they also are a high-speed internet provider. They probably have some pricing power on that. It almost functions like a utility, but without as much regulation and that kind of thing. So that's kind of interesting. But that's like an example of something I think is probably good for like a really long time, versus Verizon, where it's just like, hey, it looks cheap right now. I'll wait until it doesn't look cheap anymore and then let it go.
Yeah.
John comes in and says, but Dividend, dude, he gets nervous at all-time highs.
I mean, I would say you just have to look at how it's priced compared to the fund. Like, I mean, using Seeking Alpha, shameless plug, but
hey,
nothing wrong with plugs here.
You could.
Whoa.
All right, but you could look at like historically what it's traded at, or in the sector, what a company like that trades at. And even though Visa's at all-time highs, Ryan already knows this. We've said this many times. It's cheaper than what it was like 5 years ago, where it wasn't at all-time highs, but the earnings and cash flow growth have justified the higher valuation or the all-time highs that it's hitting now, to where it's even cheaper. I don't really connect kind of price to value. You kind of have to look at those type of
Very
ratios,
true.
I guess.
The
Very
P,
true.
Yeah,
Well,
the P was higher 5
It's
years
interesting
ago
because
than
if
what
you
it
look
is
at
today.
how something, like what an appropriate valuation level is based on like a certain metric or anything, that actually makes MPW look a lot better, because like a 1.2 price to book is usually like about where them and their peers usually trade, and we're at like a 0.3 price to book. So like that would imply that we're in for a 4x at today's prices.
But there's
So
a big reason there is that.
Yeah,
kind of
there's exactly.
There's a big reason for it.
I'd
Yeah,
argue that it's a
hey,
lot
it's a
worse than
50-50.
average REIT. Yeah,
the reason is a guy who likes to wear sweater vests and comment on my videos.
No.
Feminine voice.
That's not the only reason. Not the only reason.
It's a big part of it.
It may be a big part. I'm not arguing that. That's not wrong.
You guys know Redwood, right?
Yeah.
Yeah.
So
Yeah.
he sent me a really good informative Seeking Alpha article about the
Seeking Alpha.
about I'm it's full circle here. We always plug each other's stuff.
Yes.
So it was basically like the short seller's playbook. And if you read through this article, it kind of describes like almost line by line, like what's happened with MPW over the last, say, year and a half, with like the strategies that they use to intentionally drive prices of stocks down and target them. It's absolutely insane, but it really does happen. And it makes me maybe all the more confident that there is a lot more chance of the turnaround that we're expecting rather than it going bankrupt. I don't think it's 50-50. That's just me.
I mean, I'd argue it's an extremely risky thing. The thing that I've constantly said, if you're thinking about it,
50-50.
You have to question the value of each of the assets that may be put if the tenants can't pay their full thing, because that could question the value of the assets to another business that may want to buy them. Maybe I'm not 100% right. I'm some people call me a REIT analyst, but that's not.
We've done a lot of looking at what kind of prices they've gotten for assets in different conditions, especially recently, because obviously interest rates affect those asset values and everything. And it seems like they get pretty attractive valuations on assets that they liquidate for the most part, like either close to book value, in some cases above book value. So that would imply that the value that they're showing on their balance sheet is not just monopoly money, for lack of a better term. Matt. So and this is based on the deal they've got to sell 3 hospitals in Connecticut, and like 11 hospitals they sold in Australia, and that's just recently, right? But those values have come in pretty attractive for MPW and shareholders, and they've gotten a good amount of value out of those sales, and that's kind of what they're counting on to raise liquidity and deal with debt and everything. But it seems like that the value of the assets backs up what's on paper.
Do you all think the debt could build up with the higher interest rate, or no?
What now?
Do you think the debt could build up with the higher interest rate, or no? You think
so? That's not really. So the way that their debt works is that it basically, like, they pay interest on it. It's sort of similar to like a bond or something, right? They pay interest on it, and then it matures, and they have to either repay the whole amount or refinance all at once. And that's how most corporate debt is structured. And the reason Verizon's debt doesn't worry me is because a lot of their maturities are out in like the 2050s. So,
but eventually
certainly enough time for me to make my money on it and then move on. But with MPW, a lot of the debt is due in 25, 26, and 27. So they have to. It's the fact that there's like kind of like a time frame where they have to either figure out financing, raise equity, or sell assets. And they can't raise equity by selling shares, because what happened? They were short attacked and their share price was like driven into the basement. actually almost any REIT, if this happened, it could be very bad for them in a high interest environment because of the fact that issuing shares is one of the most efficient ways for REITs to raise money. And that lever has been removed. Like they can't dilute shareholders when the stock is this cheap.
Stock is very cheap.
Yeah. So they've got one of the most effective levers that REITs have basically stripped from them by,
I mean,
this
I'm reading
situation, but
I'm reading One Up on Wall Street. I'm about 75% through the book. And this, like, MPW perfectly describes an asset play. Like, he just calls it basically like the book value may be higher, but I think there's some questions around that. But I think that just perfectly describes it. It's an asset play. You're thinking the assets could be worth more than the debt, and then you get paid out, or the share price could recover.
I think that. I mean, I would say conviction rate probably that they're worth more than they're worth more than the debt, and like the balance sheet reflects pretty close to their real value. Probably about 90% certain on that. I mean, Leaf has over 200 grand in it, and he says he's like 95%
That's
certain.
Insane. Like, I don't know.
So I mean, I'm pretty certain. Like, I'm certain enough to have like a good amount of allocation into it. I don't have as much as some people, but yeah, I do have a pretty high degree of certainty, and so I sleep fine at night, knowing, like, feeling pretty confident in those numbers. But at the end of the day, management has to get some stuff done.
Good on you, Max. All right, everybody, we're gonna kind of have to hurry this up here, but we do have some questions from Discord. We have about 15 minutes left. But first, it is our Know Your Role and Shut Your Damn Mouth segment for the week.
Shut up, bitch! Oh my God!
Big WrestleMania weekend, and I have something to say. Well, look who it is. It's Tactical Shoe Shiner. Not going to lie, when I found out you were 49 years old, the immediate thought in my head, I've seen people look better in their open caskets at wakes than you do at the age of 49, you cuck. Come on to the Cash Flow Kings, you little pampered cocksucker, and see what happens, you little bitch. That's Tactical Shoe Shiner. I don't even know the guy's name. I thought he was a busboy at first. Keep running my name in your mouth and see what happens. Come on to the Cash Flow Kings. And also, Boogeyman, I'll gladly challenge you to a dance-off. So, see what happens. I'm pulling up to New York. My town, my city. All right. In all seriousness, though, Fiscal, when are you buying Starbucks?
So, this is the big question. So,
let's hear this.
So, I've been looking at Starbucks. I've been eyeing it from across the bar, so to speak, as you do. I've had it up thinking about swiping right on my phone, so to speak. And I think, and I keep looking at it, and I keep thinking, I keep thinking 75 might be the number for me.
Wait, fiscal. Right now, Starbucks average, like, on the 5-year P is above 30. I want to mention that it's trading at a forward P of 22. It's consistently grown revenue. Its free cash flow yield is like cheaper than the average company. What I would argue, it's a lot higher.
Are you guys saying you think it can't get to 75?
I don't think it can. That's
unless
I don't think it can.
Oh, gee, I think it's already been priced in, dude.
I think it all has been priced.
I think it goes lowest to 80. Honestly, if we're at like 86 right now, 87, I really think like fair value. Like if China numbers go through, you're a China bull. So I can go on to why it's down.
So I am a China bull, but
China.
Yeah.
All right.
But
wait.
I mean, so I'm bullish enough on China that I've got Alibaba right now. The only thing I would say on this is, one, if you're bullish on China, Baba is by far the more attractive valuation, right? But I do like the fact that Starbucks is very addictive, and it's simple, right? It's coffee, right? Who doesn't understand coffee and sugar and deliciousness? So but also, if you look at like a pure DCF model, and I know people hate DCF models, but if you try to, sort of predict their growth, right? Each percentage that I'm wrong about their growth over the next decade, which that's a long time to be right, affects the valuation by about 8%. right? And so I'm sitting here thinking, okay, what I actually think it's worth is probably in the low 80s, like 80 or 82 or something. And 75 is just my margin of safety.
What? Okay, see, all right. The company's projected to grow like
We have
international. They have international growth plans. I wouldn't value, in my opinion. All right, this is my intrinsic value for the company is about 120.
Yeah,
So
we're around like
I think it's
around there.
extremely cheap right now, and for the high quality company that it is, with the consumer loyalty. I mean, you should see the TikTok girls pulling up on the drive-through, getting that every single morning. They will get a $8 whatever venti. I don't even know what's in it, but they'll get that every single morning. The consumer brand loyalty is there. Like I think even in a recession, people would not go out without their Starbucks coffee.
But
People love it.
your valuations routinely come in higher than mine, so that doesn't surprise me.
Because I think that companies that are good will grow over time. They're going to compound over time. Starbucks has compounding qualities in buying back shares, growing their dividend, growing the revenue. I mean, if you look at the revenue growth, it's literally extremely consistent and a very strong revenue growth, and they have good return on capital employed.
And I think if you look to the reasons of why they're down, it makes a lot of sense.
Yeah,
The absolute and the absolute lowest analyst estimate I can find is 95. So the analysts definitely agree with you that I'm being too cheap.
Fuck the analysts. Fuck the analysts. I'll be honest. They're a bunch of phonies. That's what they
Took the
are.
words right out of my mouth, Ryan. Fuck the analysts. I'm going to think for myself on this one. And I think it absolutely can hit 75. And if it does, I'm in. I'm in, baby. And you guys
why do you think
buying more, right?
Do you genuinely think it's going to drop another? Like, do you think that's going to happen, or do you just think it could?
I think it's possible.
I think if SPY like crashed, it could potentially, but I think it's already like Starbucks has already gone way.
You didn't buy into Crocs or Disney. I mean, look at those now. I'm just saying, fiscal. These are high quality companies at discounted prices. That's all I'm going to say.
I'm not saying they're not high quality, but I think like.
Are you going to go with like another WBA instead of Starbucks here?
No, I mean
conversion.
Look, Starbucks is not. It's not like you're acting like it's like we're talking about what like another maybe 10 or 11% drop. Like that's not a lot in the grand scheme of things. It could
amount. It could happen, but
I just don't see any reason like that it could. Like I think everything like that's already like. I think the reason it's gone down right now in the first place, I think it's stupid. It's so stupid.
A couple bad headlines is all it would take, and
it's already happened though.
Yeah,
the headlines have already happened. There's no actual change.
That's the reason it's dropped to like 86.
Oh, cool! 30 people that are Palestine supporters are gonna go outside the headquarters and yell up at them. Like Laxman's gonna come down and it's genuinely. I think the unions and the whole Palestine thing is one of the most stupid reasons I've ever seen a stock go down.
Been aggressive.
It makes no sense.
Yeah, I just think it could happen. I think it's a realistic possibility. All right. And it may not. Like, I'm not saying it's for sure going to. I mean, I really ought to ask some of these like chart reading guys what they think about the momentum or whatever, the resistance or the.
Where do you get that DCF? Oh my god!
I don't think he's accounting for the China growth projections as well.
Yeah,
we're looking at like previous, because the China growth is like a lot of like, if it were to get back to like 115, 120, maybe even 130. China growth is going to be a huge driver for that.
They also have other international growth plans in like developing markets in the future, growth avenues through that, and there's a lot of growth still, definitely in the world. I think in 10 years it could be worth two times the market cap it is now, maybe three times.
If you're me, you do have to think like I already have a pretty good amount of China exposure through Alibaba, and so like in a sense, relying on a ton of China growth for Starbucks is almost, in a sense, doubling down on it and maybe over concentrating, right? So I have to keep that in mind, and that's the reason to have a larger margin of safety, if anything.
I feel like Alibaba, isn't there that question that you don't even own your shares because it's in the Chinese?
No, they're ADRs, right? It's that concern is, we'll just say like the buybacks. They do the buybacks and pay the dividend on the ADRs.
What happens if China just says, "Hey, we would like Alibaba's business to be under our government now. Screw you, shareholders." Like, can't they do that?
And they could literally do that with any American company's assets that exist in their borders.
Yeah, but the difference is that it wouldn't take the whole company.
No, it wouldn't. But like, I don't think.
Like, yes, there'd be a stark drop, but I mean, it's not.
Yeah, and
I
that's
think
the
it's
reason why.
Yeah.
If I'm looking at another company that has a lot of assets in China, I'm risking 2 hits. Right.
I would also think Starbucks. I mean, it has a lot in China, but it's not that much. Like, it's not an insane amount.
But is that not where a lot of the valuation is coming?
A lot
from
of the
now?
growth is, yeah.
Like I'm thinking in terms of like where the valuation is coming from. Like, why is the price where it is? And if you're counting on growth in China, and there's actually, I think things with China are going to get better soon, to be honest with you. But I think in the meantime, yeah, it's possible the price could dip a bit more. And hey, I might reevaluate. Like if it hits like 80, I might say, 80 is close enough. Like,
Yeah.
I'm fungible. I'm flexible.
I mean, we're already at like 85 and it continues falling. I'm not saying that it's not going to go to 75. I just think a lot of the pricing has already like kind of occurred.
Yeah. Yeah, potentially. Yeah, maybe this is as low as it goes.
Oh, all right, Digital Cunst, I'm seeing some comments. And just because you were on the Cash Flow Kings one time doesn't mean you're safe. First of all, it's a cult, okay? And we are cult leaders here on the channel, admittedly. What is so crazy about Starbucks at $75? You're talking about a company, I think, that could potentially double from there in price in next 5 years. I think if you can get it at 75, I could see it hitting 150.
I think if the international growth plans they do have go to plan in the next decade, it could be worth 3 times what it is now. That's my opinion. I don't know if it's going to happen, but that's like ideal kind of thinking.
I think another thing that a lot of people, I think a lot of people actually have a bias against Starbucks stock, and I'm going to play the victim thing here. I'm going to make a video saying, people are bullying my Starbucks stock, give me likes and attention, I get monetized for the first time. But no, I think like a lot of people, like, they don't go to a Starbucks themselves, or maybe they're just not like raised to spend 5-10% coffee or whatever, right? And I think a lot of people personally don't see how anybody could do that, but trust me, there's a lot of people that go to Starbucks. I actually, the other day, I went to Starbucks, everybody. I drove up there after buying about 2 shares in the day, and I got to shake the barista's hand and tell them that I was their owner, technically.
And tell them,
boss.
And don't you dare join a union or I'll bust you up, buddy.
That's what I'm going to do. I'm telling you guys, I might join like a Starbucks and like work there and like try to like reverse everybody's union thoughts.
He's going to dismantle the unions from within.
All right. We got some quick Discord questions to get to. What is the best restaurant stock right now? From Matt. I'm going to say Starbucks.
Or like current, you mean like value
right matters. We'll put value in there. Like, what's the best buy?
Okay, value in Starbucks, value out Texas Roadhouse.
Fair. Fiscal.
Man, I don't really follow many restaurant stocks. I mean, if we're talking about current valuation, Starbucks is the closest to a buy of the ones I've looked at.
I mean, McDonald's is actually not bad here too. I've looked at that.
And McDonald's like 240, like where that's like the high
I think
estimates. There's a crazy premium for not a lot of growth, I think.
Yeah, I agree with that.
Dissector, are you alive?
Yeah.
Or Dissector.
I don't know about Starbucks, man. I can't comment too much.
Oh,
but it's the only one I own. I don't own a lot of restaurants, but I know nothing about it. I just know it's a strong buy. According to the prophets, Seeking Alpha. It's Brinker. Eat.
That is a strong buy according to Seeking Alpha.
It's fiscal. So. Now you have to buy it, okay? Because Seeking Alpha.
Yeah.
If Seeking Alpha says, then I guess I better do it, huh?
Yep.
So you're going to Starbucks?
Ooh. Were there any more Discord questions?
Yes, there's a few here. Growth versus value investing. Who will outperform? I think we already kind of went over that, right?
That was like, the whole first.
Growth.
What is one company you would want to go public to invest in? I'm going to say Wegmans.
Oh, Wegmans. That's a good pick.
That is.
I think Mars would be interesting.
I'm going to go with Fidelity, my brokerage.
There you go.
Fidelity.
Dissector.
I can't think of one off the top of my head.
I'll be
Yield Max. I'd go with Yield Max.
Yeah.
I would go
buy Yield Max.
Yeah, I would buy a lot of Yield Max.
They have a fun business model.
They have good consumer brand loyalty there.
Yeah, insanely good.
They have a cult.
Wait till the margin call happens and like that would crash at like 15%. We already answered this. What price will Fiscal buy Starbucks? $75. And then Peter Stocks asked Warren Betty or Charlie Monster. I'm going Warren Betty.
Charlie Monster rip.
Charlie
Oh my
Monster.
God.
All right. I think that's it. Before we hop out of here, I want to thank everybody that was in the chat tonight. And I'm going back. PP, one of the most interesting games. Cowboy, I'm sorry I didn't get to all your comments. Digital Cunts. John, I saw Frank was in there. Stabulo, THB, Beater, Uncertified Financial Arouser.
Anti-Buffett, I agree. I agree 100%. Kava, if I could value that company, I'd buy it in a heartbeat if that was a good value.
I've never. Renato, Uncle Cody,
like Chipotle.
Citizen of the Year. Steve from Car Simplified left. Our slave editor, Oaken Blade. What a treat tonight. Dan was also in there. Paul. So thank you all very much. Eddie, thank you all for tuning in. We hit about 51, 52 viewers tonight on total. I think Twitter was popping off. So, that's what you guys need to do. But speaking of Twitter, where can we find you?
Dividend Dude, Twitter and YouTube, both of them.
Dissector, you're not even a finance channel. You're a professional gamer.
Yep. So yeah, but if you want to follow me, Dissector. I mean, it looks how it looks here. Yeah.
You got to play it one more time.
Dissector, you an idiot.
There we go.
There we go.
Dissector, you an idiot.
There you
Do we
go.
have
If
enough
somebody
people
can
you're
tell
not
us in the
very
comment
smart?
section how many clips of that there was this video, including the audio, we will. I don't know. We'll have you on sometime.
This
All right.
school, you're not very smart at all.
You're not very
Not
smart.
very smart at all.
All right. Thank you
All
guys
right,
for
it's been a pleasure.
Thank you all for
Yeah.
coming on. Thank you to Dividend and Dude Dissector. Fiscal, it was an absolute treat. And of course, thank you all for watching. Smash the like button, subscribe. Enjoy WrestleMania tonight. If you guys are watching, I'm going to go tune in now. And of course, do Dividend, stocks, sell drugs. And at the end of the day, remember, cash flow is king.
Buy the merch.